You are watching Market Watch, the brief overview of the key events from the world of finance. Financial markets have reacted with optimism to the upcoming talks between the US and China, set to take place in London today. Investors are hoping for reduced tensions, especially after a recent phone call between the two countries' leaders, which helped soften the rhetoric surrounding the trade conflict. Despite ongoing threats from the US to impose new tariffs and pressure from Beijing in the form of rare earth export controls, both sides appear ready to seek compromise. Against this backdrop, Asian stock indices rose at the start of the week, reacting to positive sentiment from Wall Street, while European and US stock futures opened slightly lower. As the US and China inch closer to potential agreement, investor interest in gold, the traditional safe haven asset, has waned. Gold prices edged lower as market participants scaled back expectations of a Fed rate cut, buoyed by strong US labor market data. Nevertheless, traders remain cautious ahead of the outcome of trade negotiations. From a technical standpoint, gold is approaching a key support level, and a break below it could trigger further declines. Still, China continues to increase its gold reserves, confirming long-term interest in the asset. Japan's economy contracted less than previously estimated. Revised data show GDP shrank by just 0.2% year-on-year in the first quarter. The revision was largely due to improved consumption figures, following the inclusion of new data from the restaurant and gaming sectors. However, analysts believe the update does not change the broader picture. Economic growth is slowing. Uncertainty persists due to US trade policy, particularly the potential introduction of 25% tariffs on Japanese cars starting in July. This makes upcoming negotiations with Washington critically important for Tokyo. Bitcoin has stabilized around $105,500, recovering after recent declines. Analysts note signs that the short-term downtrend may be ending, with further gains likely. A short squeeze, a sharp price spike that forces mass liquidation of short positions, is possible. If prices climb by 10%, it could trigger closures of positions worth over $15 billion. Despite short-term uncertainty, the key support level near $100,000 remains a strong foundation for upward movement. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.